The Ibon rate for November will soon be set, and here to talk with us about that is Jeremy Keil from Keil Financial Partners. Jeremy, welcome.
Thank you, Bob. You're right on. We are in almost October, and about mid-October is when we will be able to discover the new I-bond rate that'll start with November.
Right. And what are you predicting based on what you've looked at so far?
Yeah, so I'll call it more of a trend than a prediction because it's been pretty spotty up and down. If you had predicted it a few months ago, you might have said 10%, but right now it seems that kind of the gap is leveling out to about 6 to 7.5. So if I had to call it, we'll go right in the middle, 6.75. How's that sound?
That sounds great. And for folks who might be trying to watch this on their own, they should be looking at what the CPIU.
It's exactly it. So the I bond is the inflation rate part of the I bond is based exactly on the CPIU number. So it's kind of the global number. It's not the core part of it. It's the global number on there. And that's released, the September CPIU will be released October 13th. And at that point in time, you'll know exactly the 6 months you need to divide September into March's number. And there you go. There's your inflation rate.
Right. Now, one of the things you mentioned in the blog that you published about this topic is the last day to buy I bonds at the 9.62% rate.
That's right. So we've been tracking the I bonds for quite some time. It started with our clients asking us, what's the best way to get some interest right now? And we kept digging in. And next thing you know, I bonds have just exploded since the middle of 2021. So we've been tracking on a monthly basis on our blog at retirement-revealed.com. And something you learn is that when you go and do it yourself, you buy an I bond, it's not effective today. It's effective the next business day. So although October 31st is a Monday, that's too late. You cannot buy on October 31st the I bond and get that 9.62% rate. I would expect you could buy it on the weekend. I wouldn't chance it though. I would try to buy October 25th or earlier just to make sure you get in to that October rate.
Right. And we'll talk a little bit more about how to buy them on the Treasury Direct site in a second. But first, what should folks consider when they're buying an I bond in 2022?
Yeah, the number one thing to consider is that this is a 12-month, perhaps a 15-month decision or longer. If you want the money out from an I bond in the next 12 months, it's not going to happen. That is the rule. 12 months minimum is how long you have to own the I bond. And if you happen to take the money out in the first 5 years, you do lose the prior 3 months of interest as a penalty. A lot of people are concerned about paying that penalty, and really it's not a big deal. Just know it, calculate it out. I look at it, and that's why I say 15 months to kind of think of it as a minimum. Because let's say you buy in October, you get 9.62, and then it renews 6 months later, coming in at 6 or 7%. Those are two really good interest rates. You might want to get out of the I bond if the third renewal, 12 months down the road is a bad interest rate. And if you happen to lose the prior 3 months of interest for your penalty, you want to lose the bad 3 months of interest as a penalty. And so you're expecting for 12 months to have really high interest in the I bond. Think of month 13, 14, and 15 at the minimum as kind of your throwaway months because you'd rather throw away and lose the low interest than just cashing out immediately at 12 months and losing some high interest.
Right. So why do you find I bonds so interesting right now?
Well, when you compare to the alternative, this is truly a 12-month rate. Really even think of it more like a 15-month rate like I just explained. Look everywhere else at 12-month guaranteed rates, and you just can't get that rate on there. Let's just say that you do actually cash out exactly 12 months from now. Even after that penalty, you're still getting like 6.5%, 7% perhaps as your net rate of return. That's basically double the 12-month Treasury rate. This is basically a 12-month Treasury. You're giving the money to the Treasury for 12 months. The rates should be aligned and kind of similar. Look at CDs. The average CD rate for 1 year right now at the end of September is 0.60. That's the average. You're talking 10 times the averages. You're talking twice the equivalent 12-month Treasury. That's why it's interesting. It's just the opportunity that's there right now because of how it's calculated. That looks great for people still.
Right. And of course, when you talk about CD rates, those are nominal rates. And of course, we're looking at an I bond being there to be returns plus inflation.
Right, and that's part of it too. Is right now this fixed interest rate is at 0. They could announce a different rate. They might announce a different rate in November for the fixed part of it, but you don't know. You can't calculate that one ahead of time. You've got to wait. But you can calculate the inflation rate. And I suppose if you know October 13th exactly what the inflation rate is, hey, it's a worst case scenario. There you go, 7%, whatever it is. That's a pretty good rate.
Not bad. So, how does someone get strategic with their I bond purchases?
Yeah, so the Treasury Direct website, which is where you buy it, you have to go to treasurydirect.gov. You cannot buy it on the secondary market. You can't buy it from an investment advisor like myself. We have plenty of people emailing us from our blog saying, I'd like to buy the I bonds. How do I do it? Well, you can't do it through us. You've got to go to treasurydirect.gov. A lot of people are complaining about the antiquatedness of treasurydirect.gov. I find it not to be too bad. You just kind of know what you're getting into. And one part of that antiquation is how they calculate the interest rates. They basically only look at it once a month. It's kind of like the government collects everyone's money for that month and then just applies the interest rate for that month. So if you want to be strategic, you would rather buy an I bond towards the end of a month, because you buy it towards the end of October. Next thing you know, they gave you all of October's interest, whether you bought October 1 or October 30th. Don't buy October 31, remember? And then actually when you sell it, they don't give you the interest for that month, right? So you get the same amount whether you cash out October 1 or October 30, 12 months or 2 years from now, whatever it is. So you would rather buy, if you could, towards the end of the month. You'd rather sell, if you need to, towards the beginning of a month.
Right. And just talk for a moment about what some people view as the limitation of there being a $10,000 limit on purchases.
Yeah, so we've done different articles. We see people all the time talking about this, and some people say 10,000 is the maximum. What's the big deal? That's not going to move the needle for me. And well, that could be the case for them, but think through. A lot of people are in a couple. Well, 10,000 times 2 is 20,000. A lot of people have kids. There you go. Maybe you put some in your kid's name. A lot of people have a revocable living trust with their estate planning. You could put 10,000 in there. Some people have LLCs with their business or a real estate or something going on there. So when you look at it, there just might be quite easily, just think of just a couple with an LLC and a trust. That's one person, two person, revocable trust, LLC. Now you're at 40,000 you can do online through Treasury Direct. Yes, it's 4 different logins, but you kind of quadrupled what you thought was the limit. And it's per calendar year. So you might love the idea of buying the I bonds in September or October or even December. Let's just say you buy I bonds in December. Well, guess what? It renews in January. You just doubled your amount available because you bought in January. And the rate in January will be the same as the rate in December. So if you like it in December, you might like it just as much in January when you can get the same value again through another purchase.
Yeah. So we talk about maybe lump sum investing. Any thoughts about whether someone might set up an automatic monthly plan to buy I bonds?
Yeah, you can certainly do that. You can actually set up an automatic plan to do I bonds. There's a lot of people. Zvi Bodhi, who we were just talking about, Bob, is very big on I bonds as an emergency fund. And I agree with that, because over time, the I bond, well, it's designed to keep up with inflation. The knock on emergency funds and savings accounts and money markets is that they generally don't keep up with inflation. So if you're doing a recurring payment into buying I bonds, you can do that. Then you're just building up your emergency fund. And especially if you do it once per month, over time you realize a year into it, hey, my money from a year ago becomes available. And so it's more of a longer term approach to emergency fund, but good investors, good savers probably need an emergency fund for their entire lifetime. And so what's 12 months to get into a good long-term emergency fund?
Yeah, sounds great. So we covered a lot of ground, Jeremy. Anything we missed or anything that just bears reemphasizing?
I would just say you want to take a look at I bonds. Don't be dismayed by the maximum, because you could, I wouldn't say get around it, but make use of the different rules of per person, per entity, per year. and it's not an investment. It's not a short term, I'm getting out of the stock market kind of thing. It's replacing the CDs that you might have had, 15 years ago. You might have been a laddered CD investor. And for the last 14 years, that just hasn't worked out. It might be getting better, but the I bonds historically have had better rates than savings accounts, better rates than CDs. And just right now, you look at the market rate of equivalent 12-month instruments, and it's light years ahead. And so just take a look at the I bonds. Pay attention to the November rate, which is likely to be lower, still a high rate, but you may want to get into the I bonds before October 30th or before. Maybe try for like the 25th to make sure you get some time to get in there. And then if you like them, you may do it again in the new year, in 2023, when everything resets.
Great. Jeremy, a pleasure chatting with you, having you share your knowledge and wisdom with our viewers. It's greatly appreciated.
Yeah, appreciate you having me on.